Welcome to the deep dive. Today our mission is, well, to cut through some of the noise in the crypto market. We want to pull out the key insights so you can really get a handle on what's shaping things. We're using a recent Times of India article from July 1st, 2025 as our guide today. Okay, so picture this. Bitcoin's kind of hovering around that big $107,000 number. There's a U.S. tariff decision coming up fast. And altcoins, they're all over the place, some up, some way down. So the big question as we dive in is, what does all this actually mean for you?
Yeah, that's a great way to frame it. The crypto market, it's famously fast moving. And looking at just one price or one headline, you can feel, well, disconnected.
Yeah.
So our goal here is really to help you connect those dots. We'll link the market forces, the expert views from the source, and these upcoming events to give you a clearer, more actionable picture.
Okay, let's pick off with the main event, Bitcoin. It's sitting right around $107,000. Why is that number so important right now? It's not just random, is it?
No, definitely not random. It's become a real focal point. Investors are basically holding their breath, waiting for that U.S. tariff decision on July 9th. And that's casting this cautious but still kind of optimistic mood over everything. Just for context, Bitcoin was actually down about 1.2%, sitting at $106,984. This was Tuesday morning, July 1st. That was after hitting a high earlier of 108,317. So yeah, 107K is less a fixed price and more like a zone of intense focus, a line in the sand, you could say.
Right, a line in the sand. That dip you mentioned suggests caution, but are there maybe other signs, things hiding below the surface? I know Vikram Subbaraj, the CEO of Shadis, he mentioned this cautious undertone, but hinted at something else.
He did, yeah. It's interesting. He spotted that despite the, surface caution, the derivatives market tells a slightly different story. It actually suggests some underlying bullish pressure. Specifically, he pointed out that perpetual funding rates, they've flipped positive on the major exchanges. Now, for anyone not familiar, positive funding rates generally mean traders are paying a premium to hold long positions. It indicates a buildup in leveraged longs, basically people borrowing to bet on prices going up.
Okay, so leveraged longs building up.
Exactly, which adds momentum, but also risk,
Yeah.
And digging deeper, the liquidity data shows this cluster of short positions right near $107,500. That's seen as this key inflection point. If Bitcoin pushes past that, well, it could trigger what's called a short squeeze.
Ah, the short squeeze where the price shoots up fast.
Precisely, as short sellers scramble to buy back and cut their losses. And that squeeze could potentially propel Bitcoin towards $111,000 pretty quickly.
That paints a really bullish picture, potentially. But is everyone seeing it that way? Are there other analysts pointing to maybe some weakness?
Oh, absolutely. It's definitely not a one-sided view. Ria Segal, who's a research analyst at Delta Exchange, she actually highlighted some signs of short-term weakness. She noted that, yes, Bitcoin recently closed its highest monthly candle ever, which is bullish long-term. But since the end of June, the price structure itself has looked a bit fragile. Lower highs and lower lows. And importantly, it's now trading below its 21-day and 51-day simple moving averages. Crypto traders often see that as, well, a classic bearish signal in the short to medium term. The attempt to break $108,000 failed, she pointed out, and now the immediate support seems to be lower, around $106,800 down to maybe $106,500. So yeah, it's a real tug of war between those bullish derivative signals and the bearish price action.
Okay, so Bitcoin's on this, like tightrope. How is that affecting the rest of the market, the altcoins? Are they following suit or are they doing their own thing? It feels like a real mixed bag out there.
It is definitely a mixed bag, maybe even more than usual. It's kind of the Wild West sometimes. While Bitcoin's doing its thing, altcoins are, all over the map. On the plus side, we saw some decent gains. XRP, Solana, Tron, Monero, they're all up to 1.5%. Bitcoin Cash and Algorand did even better, rising over 4%. And then some perhaps less familiar names, Pudgy Penguins, up 3.3%, 4 gained 2%. So pockets of strength.
But not everywhere.
Not at all. There were some significant drops, too. Ethereum, which people watch closely, slipped 1.7% to $2,460. And then you had bigger falls. BNB, Dogecoin, Cardano, Chainlink, Avalanche, Litecoin, Shiba Inu. They dropped as much as 5.5%. And some really sharp ones. SPX 6900 down over 11%. Maple Finance fell 9.4%. Dexas 8.5%. It really shows you can't just paint the whole market with one brush.
No, definitely not. Given Ethereum's role, as a sort of bellwether for alts, what's the outlook there? Losing ground seems significant.
Yeah, Ethereum's at a bit of a critical point itself. It's hovering right near its 21-day simple moving average, or SMA. The CoinDCX research team specifically noted that ETH seems to be losing momentum, and they said a drop below its 51-day SMA, which is around $2,466, could signal more consolidation, which basically means it might trade sideways for a while or even drift lower. Definitely one to watch.
Okay. And within all this up and down, are any altcoins showing what you'd call relative strength, like holding up better than the pack?
Yes, the CoinDCX team did point that out. They highlighted XRP, BNB, SOL, that's Solana, and TRX, which is Tron. They seem to be showing relative strength, which means, even with the market being choppy or Bitcoin wavering, these specific coins are holding their value better or maybe even gaining. It suggests there's some underlying demand or specific confidence in those projects right now.
Right. Okay. This is where I think it gets really interesting, stepping back from the daily charts. Beyond the price swings, what are the bigger forces, the fundamental drivers shaping things long term?
Yeah, zooming out is crucial. And when you do, two big long-term bullish drivers really stand out right now. First, those significant institutional ETF inflows we've been seeing recently. That's huge. And second, this growing anticipation, maybe hope, of potential interest rate cuts from the U.S. Federal Reserve. These two factors, arguably more than the daily news, are kind of fundamentally reshaping how people see crypto.
Okay, those are definitely major themes. Can we put some numbers on the ETF inflows? Just how much institutional money are we talking about here?
Well, the numbers are getting pretty significant. Just on June 30th, for example, Bitcoin ETF saw $102 million inflows, and BlackRock alone bought 1,040 BTC that day. Ethereum ETFs weren't far behind, adding about $31.8 million in inflows. And maybe even bigger news, Bloomberg analysts are now giving 95% odds for approval of ETFs linked to XRP, Solana, and Litecoin.
95%. Wow.
Yeah. So it's not just about the money flowing in now. It's this signal of mainstream validation. It potentially opens the door for much wider adoption down the road and maybe, just maybe, starts to dampen some of that crazy volatility.
That makes sense, that mainstream validation piece. How does Sathvik Vishwanath over at UnoCoin see these big drivers playing into Bitcoin's current sort of holding pattern around 107K?
Right. Sathvik Vishwanath, his view is that this consolidation around 107K is actually part of a recovery from those recent dips below $100,000. And he directly links this stability, this recovery, to that strong institutional demand and what he calls whale accumulation. The big players, maybe institutions, buying up large amounts. That signals real confidence.
So accumulation happening under the surface?
Exactly. His take is, if Bitcoin can make a decisive break above that $110,000 to $112,000 range, well, that could be the catalyst to push it towards $125,000. But the flip side is if it fails to break out, we might see it slide back and retest that $100,000 support level again. He really hammers home the point, though, that the ETF inflows and the Fed rate cut expectations are the core long-term bullish drivers. Though he does add a note of caution. Geopolitical risks, short-term swings, they're always still factors.
It's fascinating, all this talk of caution, but also accumulation, especially when wasn't trading volume actually up quite a bit recently, like nearly 20%? That seems like a lot of activity for a market that's supposedly just consolidating.
It does, yeah, and that higher volume lines up perfectly with some pretty major developments that signal, again, growing institutional and even mainstream interest. For example, American Bitcoin Corp, which is backed by Donald Trump's sons, and the mining company Hut 8, they just raised $215 million. And their stated goal, to buy more Bitcoin.
$215 million just for buying Bitcoin. Okay.
Yeah. And then globally, look at Germany. The Sparkassen Group, a huge financial player there, announced actual plans to launch crypto trading for their retail customers by mid-2026. That's massive. Plus, the US SEC recently acknowledged an amendment for Grayscale's large cap fund trying to convert to an ETF. Another step, maybe small, but another step towards regulatory clarity. And like we mentioned, Bloomberg reporting those high odds for spot XRP, SOL, and RTC ETFs. So lots of significant background activity fueling that volume. Although it's worth noting, despite all this bullish news and high volume, the total global crypto market cap did actually dip slightly, about 1.1% down to $3.3 trillion according to CoinMarketCap. So it's still a complex mixed growth signals alongside some overall market pullback.
Okay, so wrapping this up, as you process everything we've just unpacked here, what are the key things for you to take away? We've seen Bitcoin doing this careful dance around 107K, pulled between bullish signals underneath and maybe some bearish price action on top. The altcoin scene is incredibly varied. Big winners, big losers, no single trend. And underneath it all, these powerful currents, institutional money flowing in, big economic factors like tariffs and potential Fed cuts looming large.
Yeah, I think it really hammers home that understanding this market isn't just about knowing the price today. It's about seeing how all these pieces connect. The tech, the sentiment, the institutional moves, the macroeconomics. And in a space that moves this fast with so much information, critical thinking is just absolutely vital. You're constantly seeing this push and pull between caution and optimism, this sort of dance between different market forces. It really pays to look past the daily headlines and try to spot those deeper strategic shifts happening.
That constant interplay, yeah. Weighing the potential against the risk. It's what makes it so dynamic, isn't it?
Exactly. So maybe the final thought to leave you with is this. How might that upcoming July 9th U.S. tariff decision, combined with everything we expect around potential Fed rate cuts and this clear trend of institutional adoption, like Germany's Sparkassen Group getting ready for retail crypto by 2026, how might all that reshape things? Not just the crypto charts, but maybe even your broader financial thinking in the months and years ahead. What new opportunities or maybe new risks does that create for your own strategy? Something to chew on.